If we're doing our job well, no one thinks about us. It's usually when things go wrong that people start to think what's going on in the background.
With me is Max Sherwood, CEO and co-founder of H2O Nodes. Welcome, Max.
We run nodes, primarily validator nodes. So we're running validators on Solana, Sui, Monad, Ethereum, a couple other projects as well. And we've also been part of the mainnet launches of a few of those.
How do you decide which chains to support?
In a way, what we do is kind of similar to what a VC does in the crypto space. You know, we look at previous fundraisers, we look at the team's background, we try and think about L1 versus L2, these kind of topics. We place bets. We don't place bets with our money, but we place bets with our time, with our hardware resources. I think this bear market is nowhere near as bad as 2022. People seem to have forgotten that in 2022, it was, you know, all of the biggest companies going under every other month. There was a new terrible headline. So I feel pretty relaxed right now, considering that we're supposedly in the middle of a bear market, to be honest.
Let's talk about tech.
Welcome back to Let's Talk About Tech, provided to you by Venionaire Capital, the entrepreneurial partner for venture capital and private equity. Today we're live at Vienna Blockchain Week 2026, and with me is the first guest of our today's podcasting recordings. It is Max Sherwood, your CEO and co-founder of H2O Nodes. Welcome, Max.
That's right. Yeah, thank you. Thanks. Good to be here.
Very nice to have you, Max. Max, you've been following blockchain since 2013. I've seen online long before it was mainstream and before H2O Nodes. You worked at Finoa, so Europe's leading digital asset custodian. And before that, you actually built whole grain crypto.
Sounds like you've done your research.
Yes, exactly. Please dive into this and your background and how you came to starting now H2O Nodes.
Yeah, if you want the whole origin story, starting in 2013, I guess I got into it through the hardware angle. So back then, you know, Bitcoin mining was kind of, I think, how a lot of people found their way into the space. It was the same for my co-founder, actually, even though we didn't know each other at the time. But yeah, I lived in Germany, you know, energy prices were very expensive and I did learn how to mine Bitcoin, but I didn't want to kill my graphics card. And I thought, this is so loud. I can't sleep in this room at night if I'm going to be having my graphics card running on full power. But yeah, ever since then, I kind of kept an eye on it. I watched the 2013 bubble cycle happen. And then in 2016, I kind of came back and started reading white papers. You know, proof of stake was just emerging back then. You know, blockchains like NEM were interesting. So yeah, that's kind of, I guess, when it became more of like a real hobby. And I started working in the industry in 2021. Finoa was the first company I worked at, which is the custodian in Berlin. And yeah, I was there for the very beginning of them building up their staking business. And that's kind of, the beginning of the staking obsession, I guess you could call it.
Okay, very nice. And you've co-founded H2O Nodes back in 2022. And most crypto startups gravitate toward London or Zug or Dubai, actually. So why Vienna specifically?
Well, my co-founder's from here. He's pretty well networked here. We had the ability to kind of get the company started quite easily here in Vienna. I sit in Berlin, German American, and yeah, my co-founder Daniel is Austrian. So we just happened to do it here. There's actually, as it turns out, some tax advantages to being in Austria versus Germany for a company like ours. Crypto to crypto trades are not taxed. So if we want to sell crypto, we can hold stablecoins, for example. Also, when we earn tokens from our staking business, it's not taxed at the moment. We earn those tokens as income like it is in Germany. You know, the German staking businesses have to set cash aside every day. They earn tokens as if they had been selling them at today's price, you know. So as it turns out, there's some advantages to being a staking business in Austria.
That is very nice to hear also, you know, that you guys found it here in beautiful Vienna. Here we have a beautiful view in our studio, actually. Let's dive into H2O Nodes and what you guys actually do. So most people in crypto never think about node operators, but they just assume the network works. But what do you guys specifically do and focus on that?
Right. Yeah. If we're doing our job well, no one thinks about us. Right. It's usually when things go wrong that people start to think what's going on in the background. But yeah, we run nodes, primarily validator nodes. So we're running validators on Solana, Sui, Monad, Ethereum, a couple other projects as well. And we've also been part of the mainnet launches of a few of those. So Sui, Monad, for example, we were involved in the testnet phase and then part of the mainnet launch. And we do it all on our own bare metal, so servers that we own. We rent rack space in the data center, and we own the servers, and then we run the client software. So, the Sui client, the Solana client, whatever. And yeah, we implement monitoring and alerting to make sure that it's always running 24/7 and running optimally. And that way the people that stake to us can also get the best APY and don't worry about downtime. Most chains don't have financial penalties, but for example, on Ethereum, if we really screwed up, there could be slashing penalties and offline penalties. So yeah, I wouldn't describe us as a financial business, but obviously what we do is very closely related with, that financial element of it. So it is an IT business, but it's a crypto IT business. So it's in that intersection of economics and tech that I really love to work in.
Okay. I mean, as you've already mentioned, H2O Nodes runs bare metal infrastructure, so your own servers, no cloud services. I mean, if we talk about the AWS outage, you highlighted exactly why that matters. So how does that decision affect your operations and your costs and the resilience actually of the network of your support?
Yeah, so when we started in 2022, I was talking a lot with Lido, for example. Lido is a good example of a stake pool that was onboarding more and more operators. I think, now they're at something like 35 operators on their curated set. And they were thinking a lot about this element of diversity and decentralization, also just to protect against, failures, cloud outages, whatever. So back then we were already hearing, stuff like, oh, we have too many people running on AWS. On Ethereum, it's not inconceivable to run on the cloud because the hardware requirements are quite a lot lower than something like a Solana, for example. But yeah, ever since the beginning, we were hearing that, we need to offer that bare metal, that decentralization. We're also the only validator in that data center where we're renting the rack space. Most of our competitors are renting hardware monthly from hardware providers, and they can achieve good performance with that hardware, but it's more expensive and it also tends to be clustered around the same data centers. So even now, more recently, for example, Solana Foundation is now coming out and saying, if you're running a validator in a data center where there's more than, I think, 20% of stake of the network, you're not going to be able to get the delegation from Solana Foundation, for example. So those kinds of things, we've always been able to kind of help out staking pools or the network as a whole by offering that diversity and decentralization.
Okay, very, very interesting. And if we dive in another topic, you've been deeply involved in Distributed Validator Technology, so DVT. Could you explain for our audience first what exactly that is and what the benefits actually are?
Sure. Yeah, I've been involved from both sides, both as an employee at Obol Labs, OBOL, and also we at H2O Nodes have been involved with testing DVT since the earliest days. So that was another topic that we were hearing a lot about in 2022, and Lido was also pretty bullish on it. And basically what it is if we take Ethereum as an example, which is where DVT is most prevalent, you have one node and it can run as many validators as you want, more or less. So a validator is kind of a logical on-chain entity, whereas a node is actually like a physical machine running, a set of clients, which is part of the peer-to-peer network. But if that machine goes down, your validators are going to go down as well. So DVT is a system where you can have 3 or 4 or 7 nodes running 1 or 100 or 1,000 validators. And it brings in some resilience. So for example, the simple DVT clusters that we're part of on Lido, they're 7 node clusters. So we'll run 1 out of those 7. If we go down, the validators don't go down. If someone else goes down while we're still down, the validators still don't go down. So in a 7 cluster, there's a redundancy of 2. So you only need 5 out of 7 to be online. And that's what made it comfortable enough for Lido to bring in not only professionals like ourselves, but amateur operators, hobbyists, people running at home who maybe would not be, able to achieve 100% uptime. Lido was able to use DVT to bring in all kinds of operators together and have enough redundancy to still offer a very good, uptime of those validators to the ultimate staker.
Okay, so it's does play a huge role in supporting resilience across the network. H2O Nodes operates across Ethereum, Solana, Sui, Monad, as you said, and others, of course. And how do you decide which chains to support, actually?
Yeah, it's a good question. And this is a really important, I think, like not only one business decision, but kind of a mindset in total. We're a smaller shop. We're pretty lean. We like to do a few things well, as opposed to doing a lot of things, mediocre.
Yeah.
And a lot of our competitors, also the smaller shops, you'll go on their website and you'll see, oh, we run 30 plus networks, or we run 40 plus networks. And for me, it's like, unfortunately in our industry, there's only going to be a few chains that matter, I think. And economically for people like us, there's only going to be a few chains that produce enough revenue to really justify investments in hardware, spending a lot of time optimizing things. And even just being involved in a testnet phase, it's a lot of hours you're putting into, helping to debug software, figuring out what works well on your hardware, a lot of tuning. So in a way, what we do is kind of similar to what a VC does in the crypto space. We look at previous fundraisers, we look at the team's background, we, try and think about, L1 versus L2, these kind of topics. And yeah, we place bets. We don't place bets with our money, but we place bets with our time, and with our hardware resources. And so far, I think we've done pretty well. We haven't spread ourselves too thin. We like to run under, let's say, 10 main nets at any one time. We'll actually kind of, step back from a few networks every now and then, depending on, whether we're seeing success there or not. But we don't want to constantly churn, right? Ideally, we're operating on a few networks that are really, bringing in revenue for us, enabling us to build kind of a strong, resilient organization, and something where we can, over time also contribute to the community. And, so we're thinking long term, but we're aware of the fact that, not every chain launch is going to be a big success in the long term.
Yeah, that sounds like a very strategic and rational decision from your side. You're also building RevTech, a product around Solana's real economic value. So what exactly is RevTech, and how does it fit into H2O's broader strategy beyond just running nodes?
Yeah, so as a node operator, the business is very commoditized, right? On blockchains, or at least most blockchains, it's permissionless to run a validator. It's permissionless to run a node, as it should be. But that means that there's a lot of competitors that come in and try and do what we're doing, or can do what we're doing. And that's a good thing for decentralization. But as a business, you need to diversify somehow. And I think all of our competitors have realized this as well. So that, keep that in mind. We're thinking of how to diversify the business. And then looking at Solana specifically in 2024 and 2025, it was a very good year for us and all validators, because by default on Solana, there's the inflationary creation of new tokens, which is where most of the APY comes from. Then there's, the MEV that's being captured with the Jito client. And then there's the block rewards, which is just the pure transaction fees. And by default on Solana, the validators keep all of the transaction fees. There's no in-protocol method for them to share that. So, when this whole meme coin explosion happened, the Trump coin launch, I think, was the all-time high for transaction fees. We did very well as validators, but the stakers didn't really see. I mean, they saw their APY go up a bit because of the MEV Jito aspect of it. But validators primarily kept most of that yield. But if you think about it, as a validator, sure, we had a great year, but we'd rather have more of a steady revenue stream. And I'm sure stakers, they're already holding Sol. They already believe in Solana. They believe in Solana's ability to, create more transaction fees and become more useful and have more applications. They should be the ones exposed to the upside of Solana's success. So that was kind of the initial idea behind RevTech. So without getting too into the weeds here, RevTech it's a staking pool. It's offering 2 liquid staking tokens. One of the liquid staking tokens we'll call RevSol, REV Sol. And that'll earn an APY depending on the transaction fees coming off of the validator. The other token we're calling ISS Sol, so issuance Sol. and that will earn primarily an APY or only an APY from the inflationary issuance. So basically, as a staker, you can say, okay, instead of getting one liquid staking token where all of the sources of yield are combined, but really the validator is keeping most of the upside. Now you have 2 tokens and you can choose, do I want a more stable APY from inflation, or do I want a more volatile APY from transaction fees, but where that upside is preserved, in case we do have another big meme coin cycle, or Solana fulfills its goal of becoming NASDAQ. The staker has that choice. And yeah, we spent about the last year building that protocol and application, and we're hopefully a few weeks away from a mainnet launch now.
Very nice. And I bet you guys also told the audience of the Vienna Blockchain Week yesterday what that's about. I mean, you guys had a talk there. What were your, I would say, greatest insights from Vienna Blockchain Week right now, or what are your takeaways?
Yeah, I think we've heard a lot of things that we've heard before, but we've also met some people that, maybe think more about the business. We met, I would say, a competitor who's more focused on enabling infrastructure for app chains and the Cosmos ecosystem. Cosmos is something that we never touched, other than the Bear chain testnet, for example. But yeah, I think that's also kind of where we want to take the business, is more of an infrastructure service provider and less of a, token exposed kind of revenue. So yeah, speaking with that guy was interesting. He's enabling bridges and RPC and relays and things. So I think there's a lot of niches that you can go into. We've thought about RPC and those kinds of data products, but it's never something we followed through on. So yeah, in this mindset of diversifying the business and things, I think there's still a lot out there that we could be doing. So it's been interesting to kind of hear what other people have ended up doing over the years.
Yes, I mean, that sounds quite valuable, actually. And if we take out the glass bulb now and look into the future, what do you think will be the next exciting thing, or a few exciting things for blockchain infrastructure?
Yeah, it's hard to say. I think from a, bird's eye view, it seems like prediction markets and stable coins are kind of where, and real world assets is kind of where the focus is going. As an infrastructure provider, these stable coin chains are fairly centralized. I've read through their documentation. A lot of them say, we'll kind of decentralize. It's in phase 2 or something, but you ask them and there's no concrete plans for that, obviously. And that's, the stable coin chains, they're not about decentralization. They're more about, speed, security, compliance. So as an infrastructure provider, I don't really see too much of a future in the stablecoin space. Same for prediction markets. I don't think there's too much to be done there. So we're definitely thinking more about, developing software products, more traditional services, infrastructure services. There's a few L1s on the horizon that are interesting, that we're in touch with, but nobody wants to launch their L1 during a bear market, right? So we spoke with someone yesterday who also said, yeah, we could have probably launched already, but we're kind of kicking the can down the road a bit. So it's a bit of a slow time for us, I think, and for everyone in the industry. But like I said, we're building RevTech and investing in other areas. So I think this bear market is nowhere near as bad as 2022. People seem to have forgotten that in 2022 it was, all of the biggest companies going under every other month. There was a new terrible headline. So I feel pretty relaxed right now, considering that we're supposedly in the middle of a bear market, to be honest.
That sounds good. I mean, even though it's a slower time, a few good things are coming up, and we will definitely see even better times in the future. Thank you so much, Max, for your time. Thank you for coming onto the podcast.
Sure.
Thank you guys for listening to the podcast and watching it. And keep tuning in. We will have a few more podcast editions at Vienna Blockchain Week 2026 for you guys. Thank you very much.
Let's talk about tech. Let's talk about tech, baby. Let's talk about your IP. Let's talk about steel, baby. Let's talk about